Good morning. Some people it's probably good afternoon, but I'm glad to be able to start this. I have been for quite a while thinking of how to be able to do live streams here. One of the things that I actually want to accomplish with this particular live stream is to start us on a journey, especially for newer crypto investors, so that you can be able to get to understand what is going on and be able to understand the terminologies that are there within the crypto space. So if you're watching this and you've had a particular terminology that you don't understand, what you can actually do is place it in the comments and I'll be able to actually tell you what it means. I will start with a few myself, but as we are going on, if you have any other terminology that you've heard of that you have no idea what it means, then just place it in the comments and I'll answer it. So this is the very first episode that I'm doing on just understanding crypto, and I'm also recording the audio of this because I found it is important as well to start building an audience in the audio podcast space. And this is one of the reasons why we are doing this live stream, because on my second channel, I have already started a video podcast there that is basically just me talking about whatever it is, but I don't want to talk about crypto in that particular channel. So the crypto content will be here, the business ideas content will be here, finance will be here. And just to be able to make it happen on a regular basis, whenever I have the time and whenever I can, I'll be doing live streams like this without any preparation in terms of just telling you when it will be. You'll just get a notification and we go on with it. So thanks, Ken, for joining in. And Ken asked this question. He says, enlighten me about futures, please. Thanks. So I don't know if you've been reading my mind or something, but I am actually working on content around futures because it is something that I have been doing recently, and also just to be able to understand how to read charts. This is something that I have been wanting to do, because if you can be able to learn about futures trading, then you will significantly make much more money than just putting money in spot and that's it. Yeah. So one of the things that people need to learn about futures is the fact that it is a bit more risky than it would be if you just got into spot trading. Sorry, I just got a call. Yeah, just answered it. I'll deal with it later. So one of the things about futures trading, and there's a video that's about to come very soon, probably this week or the next week. Futures trading is spot trading plus loans together, so that if a trade goes in the direction that you wanted or you predicted it would go, then you'll make much more money than if you had just placed a spot trade. And one thing that you need to get is, so let's start with spot trading. So when you are doing spot trading, what you're actually doing is, if you have $1, you actually change it into an equivalent value in crypto, whether Bitcoin or Ethereum whatever crypto that you have purchased, but it's equivalent value. But when you are getting into the future space, you can have $1 that you want to start trade with and then borrow $9. And then from the analysis that you have done, which is usually called technical analysis, which is checking the chart patterns and candlestick patterns, if you say Bitcoin is going to move from price A to price B, and if you were doing a spot trade, the money that you would have made is the difference. So, as an example, if you had $1 and then Bitcoin moves to $2 on a spot trade, your $1 has grown to $2. And that's a good way of making money in the crypto space. It's the way that the bulk of people will make money in crypto. They bought crypto at a lower price and then they sell it at a higher price, or it has grown to a higher price, so their dollar value has actually gone up. But when you come into the future space, what you're actually doing is you have one of your own money, $1, and then you borrow nine. So it looks like you have $10. And then this $10 moves from, in our example, from 10 to 20. So you have actually made a profit of $10 with your $1. So you will actually make the $1 that you have plus the $10 because of the price movement, and then you'll be paid the $10. So in this actual case, what we are talking about is the money has gone up, but your return on investment is 10 times. Okay. Now that is the easy part. That's the good, exciting part about futures. And I'll go into it in detail in a future video because I was actually planning to do content on futures. But the opposite is true. If you were predicting that it would move from $1 to $2 and then it moves from $1 to zero, for instance, in our case, or if it started at 10 and you're predicting it would go to 20 and then it goes from 10 to 5, you're going in the opposite direction of your prediction. So there is a higher risk of losing this money that you're using at this particular point, and that's called liquidation. So I'll show you all these things on the video that I'll actually do, but that's a very good question, Ken, and thanks for asking it. So this particular video is just to help you to learn the crypto terminology that is there. And one of the terminologies that is there is called fear, uncertainty, and doubt. And in short, it's FUD. So fear, uncertainty, and doubt is something that happens every single day in the crypto space. So one of the fears that people have with crypto is the fact that crypto can go to zero. While generally, as a rule, that is true, the main reason why a crypto would go to zero is most likely because it's a scam project. For most of the cryptos which have good projects behind them, whose founders have been doxed, that's another, I'm actually placing it in the comments so that I remember to define it for you. So doxing is another terminology, and I'll tell you what it means. But when you're talking about fear, uncertainty, and doubt, people who are not in the crypto space and especially are in the financial space, the traditional financial space, would spread FUD on crypto because crypto was created to replace or to take over the traditional finance space. So they don't want you to invest in crypto, and they'll tell you of how volatile the crypto space is so that you're afraid of getting onto the space. So, what does doxing mean? So, one of the things that people need to know about crypto is that most cryptos have known founders. Apart from Bitcoin, which started all of this, most cryptocurrencies, the founders of the cryptocurrencies are known. So, for instance, Ethereum was co founded by Vitalik Buterin, who's a Russian young guy, I think he's 27 or 28 now, and by other founders as well, who many of them left the project and they are now doing their own projects. So, one of the important reasons why doxing is important is because you want to know who is behind the project. Anonymous people who create crypto projects most of the time are not good people. And they want to create those crypto projects so that they can scam people out of it. Now, the biggest exception for this is Bitcoin itself, because there is no definitive proof as to who founded Bitcoin. Yeah. So that in itself, and the reason why this for Bitcoin and for only Bitcoin, the only reason why for Bitcoin it is good is because Bitcoin is the anchor of the crypto space. And if anything were to happen to Bitcoin, it would, at this moment, negatively affect all the other 10,000 plus cryptos that exist. And most, if not all, cryptos, their performance is linked to the performance of Bitcoin. So that's a reason why not knowing the founder of Bitcoin is actually good for Bitcoin, but not for the other cryptocurrencies. So that's what doxing means. Doxing means to be able to know the person behind a particular project. And just as I was talking about this, there is a crypto, not a crypto, there's an NFT that's called Bored Ape Yacht Club, whose founders were not known. They were pseudo anonymous. But one of the newspapers in the US doxed them without their consent. So that means that the reporters actually found out who the actual founders of that particular NFT were and then exposed them by saying, so and so is this particular character, and they are the founder of this NFT. While doxing itself generally is good for that particular project, it was doing well. The founders behind it were actually good, but they ended up just doxing them out of quote unquote spite. So that is what doxing actually means, knowing the founders behind a particular project. So in this particular live stream, what I'm actually doing is, if you do not understand a particular terminology, let me know in the comments and I'll bring it up and I'll be able to explain it. So I've just explained about doxing. And if you have any terminology that you don't know what it means, just place it in the comments. And now I want to go into volatility. What is volatility? Volatility essentially means rapid movement in price in either the positive direction or in the negative direction. And this is a common occurrence within the crypto space because crypto, of essence, is a decentralized kind of money. So, this is what you need to understand, first of all. crypto as a product or a cryptocurrency as a product has economics behind it, what is known as demand and supply. Demand is how many people want to buy that particular cryptocurrency any single time. So that's known that people want to buy Bitcoin every single day. That's the demand. And the demand can come from institutions which want to buy large amounts of Bitcoin, or retail investors who want to get into the space. That's demand. Supply has to do with the total number of crypto coins or tokens that exist within that particular cryptocurrency. So, as an example, there are 21 million Bitcoin crypto coins that will ever be available in circulation. This means that there will only always be 21 million in terms of supply. Now, the demand and supply is what determines the price. This is probably the first lesson in microeconomics. I remember we did that in the very first year of campus. And if the demand is equal to the supply, then the price remains constant because you have an equal amount of demand and you have an equal amount of supply. Now, in the crypto space, because people do not know that much about crypto, the more people learn about crypto, the demand will go up. But remember, as we are talking about Bitcoin, the supply remains constant. There will never be more than 21 million Bitcoin. So that in essence tells you right now, there will come a time in the future that if the demand has actually significantly gone up and the supply is remaining the same, the price of Bitcoin will go up. So every single day, you'll find that there are buyers and there are sellers of a particular cryptocurrency. And in this case, we're talking about Bitcoin. So if the demand is high, the price goes up. If the supply is high, the price goes down. So this is what is meant by volatility. Volatility is that rapid movement of the cryptocurrency. So if you come onto the space, realize that volatility is actually your friend. Because if you go into the traditional investing space where you have stocks, for instance, or you have a money market fund, if you put in a certain amount, you are expecting that you'll probably make 5% or 8% or 10% at the end of the year. It's actually been set that this is the amount of money that you'll make by the end of the year. But when you come into the crypto space, there's no one who's setting for you how much money you will make. All this is being set by demand and supply in the crypto market. So it can happen today that the price of Bitcoin just goes up by 10% today. And even just in one day, the price can go up by 20% or 30%. That is volatility. And it can happen whether in the positive side going up or in the negative side going down. You can buy a crypto today and then tomorrow it is negative 10% or negative 20%. But realize that all this volatility in the day to day should not worry you as much as you think. Zoom out a bit so that you can be able to see monthly, you can be able to see yearly, where is this crypto actually going? And if you want to get into the crypto space, this is what you can do. In the description of this particular video, there is a link to Binance where I usually buy my crypto. you can actually go there and sign up. Once you sign up, you'll be able to start seeing all the cryptocurrencies that are available on the platform. So if you are in the audience right now, please place a like on this particular video so that we can be able to actually see how many people are watching this, and see if you can just place a like on this particular video. So what I'm actually doing at this moment as we're speaking, I'm opening just another screen where I can be able to see you guys. This particular video. And I didn't want there to be feedback by you hearing two voices at the very same time. So I've actually just placed that there so that I can be able to see. I see we have 5 people watching and we have only 2 likes. So what you can do, like the video if you haven't yet, please like it. And then in the comments, ask me any terminology that is there within the crypto space, and I will actually answer you as we go on. So one other terminology that is there that I want to actually teach you, and I'm placing it in the comments so that I can actually bring it up on screen, is called market capitalization. Now, when you are looking at a crypto, this is one of the things that is really important for you to be able to check: the market capitalization. Now, the market capitalization is a total amount of value of a particular cryptocurrency. And we can actually be able to check all this by going to a site which I actually want to open right now. And this site is called coinmarketcap.com. And the reason why I like this site is because all this information, you can be able to see it very, very easily. And market capitalization is one of the things that can help you to judge. This is one of the things that you can use to judge whether or not to get into a particular crypto. So I'll share with you my screen right now so that you can be able to see. Let's see. Chrome. There we go. Let's click on share. Then I need to come back here so that good. So this is coinmarketcap.com. You can actually be able to go to the site and be able to see. So once you're here, one of the first things that you see is at the very top here, you can be able to see the market capitalization of the whole crypto market. Now, the other thing that I want you to see is how many cryptocurrencies are currently listed on this site. 18,000 cryptos. But believe me, you don't need to know all of them. You don't need to invest in all of them. You don't need to even know all of them. All you just need to start by checking is checking the market capitalization. So that's what we are actually going to do now. So I'll go under cryptocurrencies, and I'm showing you this so that you can be able to actually check. So we'll go under ranking. And this particular ranking that we are going to see here is the ranking by market capitalization, so that you can see which is the very biggest cryptos going down. And that's what we are looking at now. So let's just scroll down a bit, and you can be able to actually see this is what you come to check. So what is market capitalization? The market capitalization of Bitcoin today, as we speak, is 725 billion US dollars. So what does that mean? It's the circulating supply, which I'll talk about just after as we finish this. There are 18 million Bitcoin already in circulation, and currently 1 Bitcoin is going for 38,000. So if you take 18 times 38, you'll get 725 billion. So the same thing with the market cap of Ethereum. So the market cap of Ethereum right now is 304 billion. And one Ethereum is going for 2,500. And so with 119 million Ethereum times 2,500, you'll get 304 billion. And you can actually be able to see all this is a top 7. This is a stable coin. This is a stable coin. The reason why I will not really bother with the market cap of the stable coin is because they are usually placed to be an on-ramp onto the crypto space. This means that you can be able to actually see how cryptos are behaving by looking at the demand that's there. So you need as much USDT or USDC in order to be able to actually buy your Bitcoin or buy your Ethereum or whatever it is. So that is market capitalization. And the next thing that we need to look at is called circulating supply. So circulating supply is the next thing that we need to look at. So circulating supply means the total number of crypto coins or tokens that exist for that particular crypto. Now, when you come onto CoinMarketCap, you'll be able to see something like this. So for Bitcoin, we had said just earlier, there are 21 million Bitcoin maximum supply. So once all the Bitcoin has been mined in the year 2140, you will have 21 million Bitcoin, and there will not be any more Bitcoin after that. But right now, in circulation, in people's wallets on exchanges, there are 18.9 million Bitcoin. So it's about 90% has already gone into circulation. We are now looking at the rest of the 10%. So the next thing that you need to look at is look at something like Ethereum. When you go near Ethereum, it tells you the circulating supply, but there is currently no maximum supply. This is because of the fact that Ethereum doesn't yet have a maximum supply. And in this case, you remember we're talking about demand and supply. That means that the supply of Ethereum will continue to go up as we speak. Okay? That is at the moment. There are plans in the Ethereum market to be able to actually make Ethereum have a maximum supply so that it starts having similar kind of behavior as Bitcoin does. But at the moment, Ethereum does not have a maximum supply. So we'll go to something like Binance Coin. Same thing with Binance Coin, like Ethereum. It doesn't yet have a maximum supply. But when you go a bit lower to XRP, which is currently at number 6, you'll see it has a maximum supply of that is million, billion, 100 billion XRP, and 47.95% is already in circulating supply. So there is a possibility of you being able to get more of the supply of XRP. If it's at 47%, that's actually good because you can actually be able to see that you can get some more. So Cardano is at 74%. You have Solana, which doesn't yet have a maximum supply. You have Avalanche, which doesn't yet have a maximum supply. And I'm jumping BUSD because it's a stable coin as well. You have Polkadot, no maximum supply. Dogecoin, no maximum supply. And especially in the case of Dogecoin, you can actually be able to know if there are this many Doge in circulating supply and the price is currently at 12 cents and it has 15.9 billion, in order for it to get to $1, which is about 8 times, this means the number of Doge that you will need to have. Okay, so the next one is Shiba Inu, no maximum supply. And then look at this. This is million, this is billion, this is trillion. There are over 549 trillion Shiba Inu. And then the price is at this amount. But then if you look at it very clearly, you'll be able to know that with circulating supply, the circulating supply can actually be changed by what is known as banning of tokens. So in the crypto space, when you hear banning of tokens, this means that they are being removed from the circulating supply. Now, it is not possible to actually, quote unquote, to ban a cryptocurrency. So what banning of tokens means is that the people who are in charge of that particular crypto, they remove it from the circulating supply by sending it to a wallet address that is corrupted or that was created for that purpose. So if you, for instance, for instance, send crypto to the wrong address and that address does not exist, that crypto is considered burnt because it is irrecoverable. So that is what banning of tokens means. So in the case that we're actually looking at of cryptos which have a supply that does not have a maximum supply, that have a circulating supply that keeps on increasing, if they want to increase the price or they want to increase its price per token, then they reduce the supply. So the people who already hold that particular crypto, the demand goes up. I hope that has been easy to understand. So at the moment, we have 7 people who've liked. Thank you very much. If you have any question about terminology in crypto, just place it in the comments. It's very easy. Just go to the comments section and you can be able to actually place your question. And once you've placed your question, I'll be able to bring it up as well as with your channel. We had Ken Chege who actually asked his question and I was able to answer. And we've just answered about burning of tokens and what that actually means. So the next thing that I actually want us to look at is this particular terminology known as decentralization versus centralization. So the bottle I'm actually using, my sister-in-law actually sells these, and it's made me drink a lot of water recently, but that is beside the point here. So decentralization versus centralization. Now, one of the biggest advantages of crypto, and I'm really looking for that word, just advantages. One of the advantages of crypto is cryptos have been made specifically so that they cannot be controlled by any one government or by any government at all. And that is the essence of decentralization. Normal currency, and we call it fiat currency, and I'll explain to you what is a fiat currency. I've placed it in the comments so that I'll not forget to talk about it. So when you talk about the normal fiat currency, and let's just define fiat currency for you. So currency, and I'll go back to, because this is important so that we can explain decentralization and centralization. Fiat currency essentially means currency that is backed by nothing. That is what fiat currency means. So what used to happen is, in the banking space, banks used to have gold in their vaults. And you would come with your gold and you would leave with a paper that was the exact same value as the gold that you actually had given to the bank. So in this particular case, the note that you had, or the paper that you had, and I'm calling it paper because right now we call it money, but it's essentially just paper. So that paper that you had was backed by the gold that was in the vault. And if you came with that particular paper on the next day and you said, I want back my 1 kilogram of gold, you'll actually be given your 1 kilogram of gold. So in this sense, that particular paper, that particular note was backed by gold. And when this started in 1913, the US banks actually started with backing the US dollar with gold. That meant that they would only have the same gold, the same currency in circulation with an equal value of the gold that was in the vaults of banks. And any time that they would want to increase the supply of currency or the paper in the economy, they would need to increase the supply of gold in the vaults as well. So what this tends to do is that, as a consumer, as a user of this particular paper that we call currency, you can actually be able to bank on the fact that there is some place where a bank holds the same amount that I have right now in value of what I'm holding in my hand. And I can actually walk into a bank and I will get the same amount of money that I am holding in terms of paper. So that continued for quite a while. But as you can probably guess, even as we speak, that fact that the government had to keep on adding the supply of gold in banks in order to increase the supply of dollars in the economy, that for a government is not necessarily the best place they want to be, because you will need to build a bigger vault in every single bank. The amount of security that will be required for these particular banks also goes up, and there is only so much gold that is currently in circulation. So in 1971, what happened was, the currency that was backed by gold was changed. And the US government now came out and said, you have our word that will always back our currency. So the currency stopped being backed by gold and started being backed by the government. And in this particular sense, that is, so the government tells you, we'll back this particular promise. And everyone else, now the banks, don't need to keep gold in their vaults. All they need to do now is they will just believe the government will back the paper that they're giving out to people. So this paper is in terms of loans, this paper is in terms of notes and coins. All the circulating paper in the economy is now backed by the goodness of the government. That is essentially what a fiat currency is. The demand and supply of the fiat currency is the supply of a fiat currency is determined by the central bank, and that brings us to centralization. The reason why currency is called fake money is not because the money itself is fake. The only reason why it's called fake is because of where it has come from. Like in our country, we have one money printer. If the money has not come from that particular printer and come from elsewhere and getting into the economy, then it is considered counterfeit money. It's not counterfeit based on its features. You can replicate the features no matter how many security secret features are placed. It's possible to actually replicate them. It's possible to actually fool the UV light. But if the money has not come from the government into the economy, then it is considered counterfeit. And this centralization and the fact that money only can come from one source is what is known as a centralized currency. In a decentralized currency, the power and control over the currency does not lie with just one person. It is actually done by the community of the people who use that particular cryptocurrencies. And that means that the amount of currency that you hold on that particular platform gives you what is voting power, in essence, in the governance of that particular crypto. And when you talk about decentralization, one of the things that you also can be able to see here is the fact that if a currency is decentralized, that means that you can't just go to one particular place and find who is the owner. Everyone owns that particular cryptocurrency. If the content has actually been beneficial to you, this is how you can be able to support our channel by sending us something small on our MPESA till. I'm about to close the live because I can see my battery is blinking on that particular side. But I hope that this particular video, and I'll do a similar one very, very soon on other terminologies that we can be able to talk about, you can be able to find as much value as possible. Thank you very much for joining me on this particular live stream. I'm grateful for the time that you've actually spent with me on this live stream. If you haven't watched the video that I did this morning on the mistakes that new content creators do when they get into crypto, kindly watch it on the channel right now, and I'll see you in the next one.